Hope you are all doing great and you have some profitable automated bots as I have, as you can see. So, for those of you who've been following last trades we made together on previous webcasts, you know about the performance of the bots that we monitor. It's now doing even better. I added OXT, I guess. Yeah, that's the one I added a week ago. That's the Orchid protocol. Not really satisfied with the results as of now because, due to the lack of the volatility on this coin, and maybe I should have configured it with other parameters. So I have 2.96 as a great step for the OXC. Maybe I should have put a lower gap, so that way I could monetize on these minor price swings we had on this coin. But yeah, it's what I'm showing you now is basically the way you should monitor the activity of the performance of your bots, because that way you know if they are doing good or bad. You can actually compare the results. So let's say for OXT, let's go with $1,000, and let's set the same. Can I see the trading range? Yeah, and let's set the same trading range pretty much, and let's see if the performance would be worse or better with other parameters. So I think that's the amount we had. It's actually 35 grid levels. Yeah, but here it's dun, dun, dun. Oh yeah, because that's the bigger gap. Sure. But let's see now, $1,000 on OXT. But let's set a trading range like this, just for the sideways market. And let's check the performance as if we would launch it with same parameters but a different trading range. Backtest last week. So the result would be 6%. Yeah, well, that's compared with my 1.48%. Well, certainly this would be better if I would have opted for the grid setup with 35 grid levels, but in a narrow trading range instead of the one that I have right now. But the reason why I have this trading range for OXT, this wide gap in between the orders, is because I want this robot to trade long term and to lock in big returns, like 3% margin returns. So that's the thing. But the topic of today's webcast is going to be dedicated to the trading station we have here. That's for the manual trade mode. And I'm going to show you some tips and tricks how you can use different orders to quickly jump into the market, how to exit from the market, and what are the solutions you can have to maximize your returns and to secure your position. So let's go. So 2 weeks ago, I think I told you that we are about to add a new feature, and here we have it finally released. That's the OCO, known as the one cancels other. So let's start with this one. Okay, that's like the hot feature we have as of now. So if you move your cursor on the question mark, you will see that it's just basically cancels out if a certain condition is met. So for example, let's say I set limit buy order. Let's say I want to buy OXT at the price of 0.37. And let's say I want to buy 10% from my entire balance, like available balance to be precise. So you would notice that you can now optimize the OCO order, but for that you need to have some open orders to to play with, okay? Because as you see, the condition is that it's going to be linked with another order. So once this limit buy order that we just set for OXT is being triggered by the market price, so once the price hits this price level at which we set the limit buy order, this will cancel out some other open orders that we could have. So as now I don't have any open orders, let's open any random, let's say on 1 inch to USDT. So let's say I don't know if, okay, so let's say I have 2 coins in the list, and I have only $100, okay, that I want to allocate either to 1 inch or either to the OXT, for example. So the first one that hits my price is going to be added in my portfolio. And of course, I want to cancel out the other one because I already spent $100 that I wanted to allocate either to this coin, 1 inch, or OXT, okay? So here how I would do this. So for example, 3.2, that's the price. And let's say I would want to spend $10, and this would be my limit buy order, okay? Okay, let's set 11, whatever. So now you have this open order, which is waiting for the price to fall back down to 3.2, and that way it's going to trigger this order. And also, as I said, I want to make sure that if the price of OXT falls quicker to the point at which I want to buy it, then I want to have this option. So let's go OXT, and let's set limit buy order here at the price of 0.37, and let's set 11, no, not 11, let's set $11 here. But this time I want to make sure that my OCO is on. And okay, why don't I have open orders? That's strange. It might be lagging. The last time I checked this feature, it was working perfectly. So as of now, I don't see a reason why. Let's maybe update it real quick. Okay, that's really strange, because I actually have this open order pending. It's really strange. It shouldn't be like that. It should display me 1 inch position that I can select and cancel. It will be cancelled out once the OXT order is filled, okay? But for some reason I don't see it now, which is really strange, because I tested this before like 3 hours ago just to make sure it works, but yeah, for some reason it does not. Let's then come back to this feature later. Hopefully it's gonna work again. Maybe it's just undergoing some issues due to the overload or whatever, I don't know. It's just strange that it doesn't work as of now. But yeah, let's not waste time. You also notice that apart from the limit and market orders, we have stop order. But let's go step by step, even for those who are newbies in that, and I will just quickly explain to you each order. So limit buy and limit sell order, that's like the order you can have if you want to enter or exit the market with the minimum fee you can have. So for example, you can go on Binance and check the fee, and you will see that for the market buy or sell orders, you're gonna pay a larger fee. So that's exactly over here. This maybe that's not the best page to show you. I think there was even a better one. Not this one. But anyway, for market orders, typically on exchanges, on centralized exchanges, since market orders, they are of the first priority, and for being in the list of first priority, you need to pay a larger fee. So usually you only use market buy or market sell when you need to enter the market or exit the market right now. So that's the time when you would use, and for this speed you pay a larger fee. Whereas when it comes to limit buy or limit sell order, you are basically a market maker, and that means that as a market maker, your order will be placed in the order book, so it's going to be visible for the rest of the traders or portfolio managers out there on the market. And then that the way people can see what's the demand and supply on the market, and that way market becomes more or less transparent. And since you are now the market maker, then you pay a lower fee. Sometimes on some exchanges it is even a negative fee, so that means that actually the exchange pays you for that. So you would use limit buy or limit sell order when you don't have you are not in the rush to enter or exit the market. You'd rather wait for some price to for the market to reach, and then once it reaches this price you will enter it automatically. So for example, I want to buy OXT at 0.37. So it can be 10 minutes until it reaches this price, or it can be a few days, it can be even weeks. That's the thing. It's a pending order, and it's going to be triggered only once the price hits it. As simple as that. So now you have this stop limit, which is a bit more complicated than a typical limit order, because you now have this extra information that you need to feed the exchange with, and it's also known as the conditional price. So for example, I want my exchange to set a limit buy order only if it at first reaches, let's say, 0.42, and once it reaches this price level, so that's our condition, I want it to plot a limit buy order at the price of 0.4, for example. So why would I do this? Why not setting 0.42? Well, that's because I think that once it reaches 0.42, I believe that it's gonna fall back a bit, and that way I can buy the OXT at a better price, at a lower price in this case. So that's one case scenario you can use with a stop limit, because you set the condition. Once the condition is triggered by the market price, it automatically activates the order itself, the limit buy order. Okay, so once I click buy, you will now see that my order is plotted where the price is 0.42, but once the market price hits it, it's going to plot a limit buy order at the price of 0.42. Okay, so that's the thing. Let's check real quick. Okay, for some reason still doesn't work, but anyway, let's go back. And the same applies to the stop limit sell order. Let's remove all the drawings here and let's cancel this order out. So for the stop limit sell order, it can work the same way. So for example, you want the price to break the resistance at first. Once it breaks it, and you see that the price is now trading above the resistance for, let's say, the next 2 days, you are now confident that you can expect the price to climb even higher, and that way you can sell your OXT at a higher price, for example. So what you're gonna do, you're gonna put your stop at 0.3965. That's where we have our resistance here. And then you want it to activate a limit sell order at a higher price, let's say 44. So that way By doing this, you expect the market to at first reach a certain condition, and the condition that we said is breaching the resistance line, trading above it, and then hitting the price of 0.44, and that's our conditional price. And once it's being triggered by the market price, it will plot a limit buy order at 0.44, which is somewhere, oh sorry, 0. Yeah, exactly, 0.44. So this is where it's going to set the sell limit order, and it's going to sell at OXT from your balance. Okay. You can play with this order in any way you want, and you can combine it with some other orders as well. So for example, you can even set a stop loss in advance for this stop limit sell order. You can set stop limit buy in that case, for example. Well, basically, if you are trading futures market, that's how you can use it. But yeah, I mean, the only difference from the ordinary limit buy or limit sell order is that now you have this conditional price, which once the market price meets this condition, it's going to execute the order that you want it to plot. Okay, so that's the thing, how you can use the stop limit. The stop order is, well, honestly, it's like my favorite one, I would say, because that's the order that you really need. Then you anticipate a certain price movement, like a crazy price movement, and you don't want to skip it. You know that if you anticipate a strong rally, and let's say you plot your stop limit buy order over here, okay, then there is a huge chance that it won't be triggered, because as you know, market orders are of the first priority, and of the second priority you have limit orders. So it can be that there won't be any liquidity on the market to execute your limit buy order, because the whole volume was captured by the market trader, traders that's been executing limit buy and limit sell, market sell and market buy orders. And that way, when you use limit buy as a stop limit, there is a chance that you will miss this, you will skip this rally. So if you don't want this to happen, which can happen if there's a huge market rally or huge market drop, instead you would plot a stop buy order. And let's close this one, and let's reload the page, and maybe let's use another example on another coin, maybe Ion trading to USDT. So let's say that you found a certain formation on a chart, and let's say you expect the price to breach this angled down resistance line, and you anticipate that once it breaches it, other market participants will buy this coin like crazy, which will move the price to the moon, and you don't want to skip it. So you're gonna plot stop buy order at the price of, let's say, 0.18.1 maybe. No, actually, let's put it a bit higher, 0.3. And you want to buy 25% from your available balance. So as you click on buy Ion, it's going to execute a market buy order at this price at the time when the market price reaches this price level. So that way you're going to pay a bigger fee compared with the ordinary limit buy order, but your market entry is pretty much guaranteed here, because that's the first priority order, and that way you don't skip the market rally. But for that, you just pay a bigger fee. That's the thing. So that's why I really like this order, especially that I expect some kind of extreme volatility on the market, and I'd rather stick with stop buy or stop sell orders, because I know that even though I pay a bigger fee, which is relatively bigger, it's not that big. Like by 95%, I would say it's guaranteed that you will be like your order will be executed, because that's the first market priority order. Okay, it's kind of for you to stay safe. Okay, so yeah, well that's pretty much it about the orders we have, like the limit buy, limit sell. The market buy and sell, it's really straightforward. If I, let's say, want to buy 100 ions right now, it's gonna buy it right now at the market price. Okay, and the stop one we just covered, stop limit also covered, and also we have some additional order types, like the shadow order and the TVAP. So the TVAP is let's say you don't want to buy Aeon right now at, okay, let's say you wanted to allocate 10,000, not 10,000, it's what's 70? No, it's around 55. So yeah, that's around 55, maybe it's 56. Yeah. So let's say you wanted to buy 56,000 Aeons, which is like $10,000. But you don't want to buy it at one price straight away, because, well, if not the case for Aeon, but for other coins that have low liquidity on the market, this kind of huge order could move the market crazy, and you would not end up buying the coin at the best price because of the low liquidity on this coin. And instead, you'd rather buy it proportionately. So you can buy 56,000 Aeons in 6 hours in, let's say, 40 orders. No, 40. So that way it calculates that per each order, it's going to buy you 1,400 Aeons, and it's going to execute these 40 orders within the time period of framework, of 6 hours. And that way you kind of spread your investment. So the price can swing, and that way your TVAP will execute your order here, and then at the lower price, and then the price rises, it will buy at a higher price. But eventually you spread the risk, you don't put a lot of pressure on the market if that's a low liquidity coin. And yeah, in 6 hours you buy what you wanted. It's actually a great tool for portfolio managers that manage huge portfolios, like sometimes 10 million, $20 million. And let's say you want to buy some coins like Akash Network. So for those of you who know this project, you know that on the market there is not that many coins traded publicly, because around 80% or something of Akash coins, they are in locked staking and in the possession of the team. So it's a kind of a low liquidity coin, and some huge buy orders, like a couple of $1 million, it can really put a huge pressure on the price. You can drive it like crazy on your own. So to avoid this, you'd rather spread the volume over time and over some multiple orders. So that's how you can use the TVAP. The same way with the sell. If you need to sell this huge amount of Aeons, for example, then you can sell it within the next 7 days. So each day it's going to sell a portion of it, but that way you kind of gradually get out of the market. So this can be an option for you as well. Yeah, so that's pretty much about the orders. What I like about the limit buy order or limit sell order is that you can set uh, multiple take profits. So, for example, why is that? Order positions. I'm not sure why it's not loading this order we set with you. This yellow one should be here in the list. I mean, for some reason, I don't know, like maybe you guys can explain to me, but only on webcasts it happens that you try to show something, but it doesn't work as it's supposed to work. Because literally 2 hours before the webcast, everything worked perfectly well. But as of now, I don't see my OCO orders, so I cannot show you for some reason. Maybe let's try again real quick. Let's say I want to buy this at this price, $20. Buy. Yep, so that's the order. And let's say I want to set another one on 1 inch to BUSD at $3.20 in total. Okay, maybe. Yeah, it's still, you see, it should show me my open order, but you see, it says you don't have open orders, but in fact I do have open order here. That's the one we just set. Ion trading to USDT. It should show me it displayed here. So I could select it and it would cancel out if the 1 inch order is being executed at first. But yeah, unfortunately I cannot show you this. So I'm gonna, like after this webcast, I'm gonna go to the IT department and tell them that what the heck, the guy's been waiting for this feature, but I cannot show it to you. So yeah, I promise you that I'm gonna make my best to tell them that it's a bad thing that on the webcast I cannot show the order, like the new feature that should be working perfectly. Okay, but yeah, let's go back to limit order in that case. Let's go to maybe Alice to USDT. Yeah, and sorry for my voice. I think it might sound a bit weird because I got sick a bit, have a sore throat, so it might sound like not my typical voice if you compare with other webcasts. But yeah, anyway, still hosting this webcast for you guys just to show you some tips and tricks. So yeah, I mean, you know that I follow this rule, which is like first you allocate 50% to automated bots. Next one is 20% to smart trading, and that's exactly what we are discussing today. That's the smart trading using this manual trade orders like limit buy, market buy, stop limit, and the rest goes to hodl strategy. Just buy crypto and hold it. So you know that in the smart trade mode, to which I allocate 20% of my entire balance, you have this perfect thing as multiple take profits. You can set up to 5, and that way you increase the odds that you will get out of the market with at least some profit. Because for example, if you set just one order, take profit at the target price of, let's say, 20%. Oh, sorry, 20% should be here. And let's say $15. No, that's $1,000 at the price of $13,000. Yeah, so that way you need to wait for the price. Actually, let's say 40%. You need to wait for the price to rise by 40%. No, from that point, 40% to lock in your returns. So why would you risk that much? Why? Because you see, the chances that the price will reach 40% are slightly lower than if you set multiple take profits and spread your investment. So for example, instead of 40, you said, I want to sell 20% of my entire position once the price rises by 10%. Once it rises by 15%, I want to sell another 20 of my position. Once it rises to 25%, maybe, this time I want to sell 30%. And the rest is left for the highest take profit, which is 40% from the initial price level. And here I want to sell the remaining, which is 40%. So that way you kind of spread the risk and you increase the odds of getting out of the market with some profit, because you have multiple orders to get out of the market. So the closer you set them to your entry price, bigger is the chance that it will be triggered. Okay, so instead of waiting to sell everything at the price which will rise by 40%, it really makes sense to spread the risk, get a bit less from the market than you would otherwise get if you would have only one take profit at 40%. But the trade-off here is that, once again, you increase the chances of getting out of the market with at least some profit, because it may never end up reaching 40% of the price growth. It may, let's say, rise to only 25%, which is like the third layer of your take profits, and that from that point it will fall again, for example. Okay, so if you would trade only with a one take profit, you would be in a loss in that case, because you didn't actually realize any returns out of the market. But when you have multiple take profits, like we have now on this chart, that way we would have sold 20% at the 10% of the growth, 20% we would sell at the 15% of the price growth, and 30% we would sell at the price growth of 25%. Okay, so we would be out of the market by 70% already. See, 20 plus 20 plus 30, that's 70%. We would stay in the market with the remaining of oh, actually, you see, it's a wrong calculation. It should be 30. Yeah, so in that way we would be left with only 30%. So that way you can maximize your returns by spreading your no, but by having multiple take profits, you increase the chances of getting out of the market with some profit, and also you minimize the loss, because, for example, in this scenario where the price rises by 25%, but you don't have these take profits here, you have only take profit at 40%, you see it falls from that point even lower, below the entry price, and that way you are by 100% of this entire position in a loss. So with multiple take profits, you have a better market strategy, because you spread the risk, and that way you maximize your returns, because it realizes some profits from the market by executing this first, and then the second take profit, and then the third take profit, and that way you get out of the market with some profit, which will eventually offset the loss that you would have incurred with the remaining of 30% of your position, which was not sold, as the price did not reach 40% of the price growth. Okay, so these are some tips and tricks you can use. I really like this feature we have here, having multiple take profit orders, because that way you really split the risk and yeah, increase the odds. And most importantly, it even calculates the potential return. So if all of these take profit orders are triggered by the market price, then your profit is going to be 331 US dollar, USDT in that case. And the same way you can have your stop loss to show you the potential loss you can have. So let's say you set your stop loss here, your entry price is where you have this yellow line on the chart. So that's exactly minus 17% from the entry price. So you risk to lose $180 for the reward of $400. So you can even, let's say it's not 17 but maybe 20. So if you divide the potential return by the risk you take, it's going to be a ratio of 2 to 1, which means that for $1 you risk, your reward is going to be $2. And that's the rational trading, because when your potential return exceeds your potential risks, it means that this trade is worth it. But you need to make sure that market conditions are favorable, and that there are big chances of the price to trigger your take profits. If they are too far from the entry price, I mean, the chances are way lower in that case. So you also need to take into account the fundamental aspects of the coin you selected to trade. You need to be really sure that it's gonna pump, and you also need to make sure that you don't put all the money in one trade. Don't forget about the diversification. So don't forget about other coins, don't forget about other strategies. That's why I have this split. 50% goes to automated bots, 20% goes to smart trading, and the rest goes to hodl strategies. So we had this market sell-off, as you remember, as of the 7th of September. So we all incurred some loss here if you were trading back then. But thanks to automated bots, they kind of offset this impact, this negative impact we had in the next 5 days, because you see the market has been trading sideways, and that way it gave our S-bots opportunity to make money. So for example, my algo trade is doing just great. See, 99% in 1.5 months. That's insane result. So not only did it peak that high, but also you see the price been moving sideways for quite a long time here. And we know that on the sideways market, SBOT is like the best one. So that's why you see it managed to capture all these market price swings. And also thanks to the trading down and trading up features enabled here. So there have been questions about the trading up and trading down. Let me tell you first. Maybe not here, but maybe on the bots. Okay, so here we have the trading up. So for those of you who don't know, the trading up feature lets your bot to follow the market rise, even if the price is now trading above of the initial trading range that you set. So for example, if the price of OXT goes above of my highest order I have in this trading range, then with the trading up, it will still trade for me even if the price is going to be here. Because what it's going to do, it's just gonna restructure my grids. It's gonna set new orders so that it could follow the market. Okay, and that way it works for on the algo, for example. As you can see, the whole story started in this area. Back then the price was 0.86, so the trading range was, I think, around this area. Yeah, the same white as here, it was the same white pretty much over here, and it's been following the rally since then, and now you see this trading range over here. So that's the huge benefit of the trading up, and that's something you can have on only few platforms. as I know, and Bitsgap is one of them, and it's made it that easy. So it's just you switch it on, and here we go. You are in the market. You can always switch it off if you don't want it uh, to follow the market rally anymore. But let's say you decided to change your mind again, and then you in the next 2 days you decide, okay, it was a better decision to switch off my trailing up. I want to switch it on back again. You can do this. You can switch it on back again, and the configuration will restructure grid levels again so that you can follow now the market rally again. Okay, so that's how it works. Pretty much the same with the trailing down feature. Okay, with the trailing down, you basically plot. Well, no, it's best to say you let the bot to plot new buy orders using the quote currency from your available balance. So that's why you have here in my case NA for Solana and NA for Alga, because both were triggered by the trading down and trading up. So that means there was extra money put into this because of the trading down. I even have on ends the trading down feature. So whenever it starts to trade below the initial trading range, it will set new buy orders over here until the price level at which you set your stop trading down. So it's gonna buy more until this price level, until they stop trading down. And so that way you can always restructure your, reconfigure your bot even when it's live. So let's say you see the bot is no longer trading in a range, and that way you would see a range status here, or the yellow one, range. But you can set the trading down, and that way you give extra money for the bot to continue trading. Okay, but only do this if you really think that the price will bounce off the support line quite rapidly to recover from the market sell off. Okay, so that's the thing about the trading up and the trading down. So for example, you can have your stop loss trailing in the smart trade mode with limit buy order. So that means that, for example, let's set it $5.8 maybe. No, that's $6. And let's set your trailing stop 5% from the entry price. Okay, so that's what we have here. Once the price falls here, it triggers this yellow order, which is in this case buy order. Your stop loss will be plotted on the exchange, and if the price will start to rise, then the stop loss that you set, it's not gonna stay here. It's gonna follow the market, maintaining this gap you set between the entry price and the stop loss, which is 5%. Okay, so if the price is now trading here, where I have my green line here, your stop loss is going to be exactly where it maintains this 5%, which is around here. Okay, so it's gonna be following the market, and that way at some point your stop loss becomes your take profit, because when you are in the profit zone, in our case the profit zone is the area above the entry price, so this is your profit zone pretty much, and below is your loss area. Let's make it red. Okay, so when the price is now above your entry price, like the market price above your entry price, and the stop loss you set with the gap between your entry price of 5% is now trading above the entry price in the profit zone, that means it is pretty much your take profit now, and it's never gonna fall down back again because it's only trailing up. If the price for some reason after a sharp rise decides to fall, then in that case your trailing stop will not follow the market down. It's gonna stay where it stayed the last time the market was rallying. Okay, so that's why at some point it will become your take profit. So it's a really cool feature because that way you can secure your returns. Initially you start with the trading stop loss, which acts as a stop loss, but once you are in the profit zone, it will become your take profit, which is a good thing because if the market starts to fall unexpectedly and you are away from your computer, and you don't have a chance to close this trade manually, for example, then at least you know that you have this trailing stop loss that will save your returns because it now acts as a pretty much trading take profit. Okay. In case of the bot, when you have trailing up enabled, then if you also have the stop loss becomes trailing. So you set the trailing up and it automatically triggers a trailing function for the stop loss. So it's gonna move together with the market. So let's check on algo. No, yeah, let's go with algo. So initially my stop loss was here, but now because the price been in a rally and we are now trading over here, the stop loss would be around this area. So you see, it's a perfect scenario for me because it exactly lays where I would expect it to be if the price starts to fall, because it would mean that it's now below the support line and most likely it will fall to the next key support level. But I will be out of the market already here before it actually happens. So that's why having this stop loss in my automated bot, so with the trailing up feature enabled, it's like the ultimate combination you can have to maximize your returns and to secure and to maximize your returns and to minimize the loss. That's like the ultimate combination. Okay. So let's see real quick what are the questions you can have. Yeah, I'm really starting to lose my voice. I'm sorry for that. So here's the question. Is it a good idea to start my spot bots with my grids at the same level as the current price and then letting trading up do the buying? Well, yes, exactly. I mean, you don't need to set a really wide trading range initially to capture the whole potential price movement you can have, even in the area where the price is not yet explored. So we can assume that this area is not yet explored. So, for example, in this trading setup that I set, I decided to have this wide trading range. It's just because I want to have the grid step of 3%. Okay, so I want to get this big margin returns from the trade. But as we backtested initially on this webcast, you would see better results if you would set your trading range here and narrow one. And in that case, your grid step would be around 0.59% or something. That was, I think. No, that's Kusama. I think we checked it on OXT, right? OXT, $1,000. Hey, come on, that's really strange. Okay, whoop. Here we go. Yeah, so this would be a setup. We can backtest it. and see what be the result. So yeah, it would be 6.54% for the last 7 days, which is not the case for me because it's only 1.48%. So yeah, it would make sense if I would expect this kind of sideways market in the next 7 days, then yeah, I would set this kind of narrow setup. But I didn't want to really care much about OXT. I just wanted to have some OXT on my balance and to get out of the market gradually with a 3% of the margin. But for like active high frequency trading, it would achieve bigger returns here if I would have a narrow trading range with the trading up enabled. Because if when we have the trading up enabled and the price goes above of the upper limit price, the trading range will still follow the market. Okay, so it would be here now. The same thing I have on algo. Okay, on algo my grid step is 0.79. And yeah, you see it's a narrow gap. You can even see the range. It's only 15%. That's a narrow gap. And so far it may be 100% for the last 1.5 months. Okay, so it's usually you can have different strategies. It doesn't necessarily mean that having a wider trading range is worse or better than having a narrow trading range. It's really case by case and depends on the way the coin is going to trade, whether it's going to trade in a sideways market or it's a falling market that will happen in the next week, or a rising market in the next week. Depending on your anticipation, you set different strategies. Okay, so the rule of thumb is that you set a classic bot if you expect the market to rally. It's the best one to achieve highest return when the price is going high, establishes new higher highs. Okay, something is wrong with my drawing tool today. And you set the as bot when you expect the price to move sideways, or you expect the price to fall a bit before it bounces off and rises back again. So that's the case for the as bot to bring you the biggest returns here. That's why you see I have different bots. I have as bots, I have classic bots, depending on my expectations. Let's actually see what are the top performance here. Average daily. So you see so far my as bots, they achieved the biggest returns, and that's because we had a series of sell-offs on the market, and we know that on the falling market and when the market is moving sideways, as bot is the best one. So that's why you see these are basically my top performers. And the classic bot performers, they brought me the least of the return because of these market sell-offs and the price moving sideways. It's not really the best one to use when these kind of market scenarios happen. But yeah, you can never be 100% right in the direction. So it basically means that out of the 12 trades that I have here, 3 of them, I was wrong about them. I was wrong to set a classic bot on Uni, SNX, and OXT a month ago. So I should have stuck with the ASBot, and this would result in a better performance eventually. Okay. Don't forget about the new analytics, the new dashboard you have here. So, for example, you can compare the results. What would be if you would just hodl coins? That's the initial balance when you started the bot. And that's the result you would get if you would just hodl this 70 inches. It would be just $20. With the bot actively trading, it would be $74. Okay, so that's the apparent advantage of automated bots in this kind of scenarios. Hodling is never the best. It's not always the best strategy to follow. Automated bots can bring you more returns than a simple hodl strategy. Okay, so yeah, that's why I really recommend you to diversify with strategies. So in my case, that's 50% in automated bots, because I know that they're gonna bring me returns daily, and they're gonna offset the uh, the loss if the market is falling because of its dollar cost averaging effect and features like the stop loss, and then the investments being spread by multiple orders. So these kind of things. Okay, and now you know how to trade in a smart trade where you have multiple take profits. You can manually set. You have projected return, projected loss. You can calculate if this trade scenario is worth it or not. If the projected return exceeds the projected loss, then it's worth it. If it's not, then it makes no sense to open trade that will bring you a return, but for a higher risk taken. Okay, from the logical standpoint, it makes no sense. So yeah, and mix with these strategies because you now know how to trade automated bots. You know how to trade in a smart trade. So the best way to the best way is to practice always. Okay, that's why we have this demo mode. And in the demo mode, you can trade with your virtual money, and you can experiment with different orders until you learn each single one that you want to use, and you experimented with different market scenarios, and now you know the best way to use the stop limit, for example, or the stop market, or stop market buy or stop market sell order. It's really about practicing. So the more you practice, the quicker you will grasp the nature of this smart trade mode and how to come up with the golden strategy for yourself based on the orders you can use. Because you can mix with them. You can have limit orders mixed with the stop market sell or buy orders mixed with the stop limit buy sell orders. So as you now understand the logic of these orders, you can now mix the logic. You can combine the orders together to create the ultimate strategy in the smart trade mode. In bots, it's easier, so that's why if you are a newcomer, I recommend to start with limit buy and limit sell orders, and with a simple classic bot at Bitsgap. Of course, you can start in the demo mode until you trade on the demo mode. It's like a sandbox for you, risk-free, but still you get this experience. You get this better understanding of how to act on rapidly changing market conditions, when it's the best time to switch from the classic bot to S bot and vice versa. So it's really all about the practice. And I really hope you guys take advantage of all these features we have, because that's like the ultimate experience. You can have an all-in-one platform to have diverse strategies, risk-free trade mode to experiment with new strategies or to get new skills, get new expertise, absolutely risk-free. It's like nowhere else you can actually find this level of practical orientation you can have at Bitsgap. Okay. Is there any difference in return with using Binance compared to Binance US? To be honest, I don't know if on the Binance US you have a different fee structure when on an ordinary global Binance. Okay, so it may be the case for you if you are a US citizen and you trade in on Binance US. It may be that the fee structure is different, but I'm not sure about that because I don't have this urge to trade on Binance US because I'm not a US citizen, so I cannot trade on Binance US. So that's why I don't know much about the Binance US, but I think it's pretty much the same. What the trick is, by the way, on Binance, they have quite large minimum threshold. So, for example, for most coins they set a minimum trade size of $10. So if you want to sell or buy a certain coin, at least you need to spend $10, which is not the case for other exchanges like OKEx or Huobi, for example. So that's why on my real account I have Binance, Huobi, and OKEx, because I know if, let's say, I want to trade OXT coin, and I know that there is OXT on both the Binance and Huobi, then I gonna stick with Huobi because I know that on Huobi they set lower minimum trade size requirements compared with the Binance. So you could have you can have trade configurations worth, let's say, $200, which you would otherwise not be able to afford on the Binance because of their minimum trade size requirements. Okay, and you would not get this amount of grid levels on Binance because of these strict requirements. Okay, so it's really about that. Sometimes you have only some coins on Binance that are not listed anywhere else you would love to trade. So, for example, I prefer to trade on OKEx and Huobi and Binance. But if there is no coin that I want to trade on either OKEx or Huobi or Binance, then most likely I gotta skip it. Okay, because I prefer to trade on reputable exchanges and on the exchanges that have the liquidity and been on the market for a long time. They had the credibility, and yeah, that kind of brings more clarity. And I mean, I've been following this market since like 2016, I would say, and Binance was since 2017 my leader, and it's been 4 years since then, and it's still like the top one, and yeah, well deserved. So that's why Binance is usually my first priority. But we also have some other. So it's just depends on how you determine whether or not you can afford trading on Huobi or OKEx, whether or not you're restricted to trade on these exchanges. If you are satisfied with the level of security they offer to you, well, it's you need to have conduct your own due diligence on that before you select the list of cryptocurrency exchanges you want to trade on. But yeah, there is always a difference between them. And on Huobi and OKEx, they have lower requirements than on Binance. So sometimes I launch automated bots on Huobi instead of Binance. Okay, just because of the trade requirements. So yeah, I think we covered pretty much everything I wanted to cover today. Uh, is it best to use VPN in order to trade internationally when you are in the US? Well, as far as I know, you actually need to pass the KYC if you want to withdraw a certain volume. Like I think it's from. I'm not sure what's the. I mean, so on Binance they have 3 levels of verification, and depending on the level of verification, you get different perks. So if you need to have these perks, which are only available on the second layer verification, then you need to pass a stricter KYC, and well, using VPN will not save you from that because they still can see who you are, where you are based at, so they would see you are using VPN. But I actually honestly had this experience using VPN in the region where I stayed, and this region is restricted. It's in the list of restricted regions from which you cannot trade on Binance. But I guess they mostly they have this built-in system to monitor your activity, and if they see that you were registered in a country which is allowed, which is not prohibited to trade, and you've been using this same IP multiple times, and only in rare cases you used um, not typical IPs because of the VPN, I don't think they're going to restrict you. But I mean, if you're not a US citizen and somehow you manage to get registered on the Binance US using US VPN, well, I'm pretty much sure at some point find this out, and they can easily halt trading for you. So I'd rather not play with this thing, because these are centralized exchanges and they need to comply with some strict regulations. So that's the risk we take, and I'd rather not use a VPN on Binance, to be honest. Yeah. So I think that's it for today. That's what we wanted to cover. I wish I had more time, and I wish I hadn't got the sore throat to yeah to speak more. But as of now, I feel like that's the end of today's webcast. If you have some questions unanswered, yes, always feel free to leave them in the comment section below. You can always reach out to the support team, and you can always ask the question next time on the next webcast, because we host these webcasts on the reoccurring basis. So we're gonna have it next Thursday, most likely. So stay tuned. Connect with Bitsgap on Twitter or Telegram. Stay updated. You can watch previous webcasts to learn more about trading and some other tips that I covered on previous webcasts. And you can also go to Bitsgap blog to get some education, because we have some educational material, some trading tips and tricks as well, and even trade configurations for automated bots that I designed based on the patterns you can recognize on the market. So yeah, I wish you profitable trading. Stay safe. Try not to get sick as I did last week. Feed your immune system with enough of the vitamins, because it's a fall, and usually we get fall fever. So yeah, don't forget about your immune system. Stay strong, guys, and yeah, peace, love, and see you next time.